JDMBI.com. This is John. This report is for the 6th of September. Well, Friday's action then led to our holiday action, which was, of course, just brief because it's European and Asian session. And as we're in pre-market right now, slight improvement. We can see a nice turnaround here from MBI readings, not quite above MBI white, just shy of it. So a move above that would certainly be a positive. We did get the dip of orange below green, but not below red. So this may not have that much steam behind it. We will see as it plays, but overall looks still, we're in that continuation week, obviously with the pink bar depicting exactly the color. Not too much doubt in that one. NASDAQ looking identical from those readings. A little bit stronger from a MBI standpoint, though, because it has already seen the magenta. Now, keep in mind, this is the current reading, and that will change through the day. But overall, we already saw the beginning of rise in momentum from the magenta, which has stabilized things. And that's just kept it from the continued deterioration of where price is. Has anything really demonstrably changed? Oh, well, Russia decided that they just weren't going to turn the Nord Stream back on. Eh, as if that was any shock to anyone. When you decide to try and destroy them economically, you'd wonder why they would lash out. But here we are. Europe is braced for a lot of mayhem, and that's why the euro just can't get out of its own way. They're still trying to support it quite a bit, but at the end of the day, now you don't even need dollars as much as you need rubles in order to buy the oil, because that's the trade that it is. So the U.S. has kind of shot themselves in the foot on that one. No surprise there. The improvement, though, in gas prices overall, oil moderating a bit, certainly has helped. Gold starting a little bit of a climb back. There really isn't all that much impetus for gold unless oil really takes off, and oil is kind of caught in the middle zone. Of course, you're still below 90, so as long as it's down in those ranges, you're much better off. If it shoots up into that 95 plus range, then yeah, there's going to be continue. Not that this is cheap. This is artificially, elevated. And OPEC, I think, announced that they were going to reduce the extra production that they told Biden they were going to do. So the fist pump didn't quite work out. It happens. And from a treasury standpoint, as the market was fading, people moved some money back into treasuries, which decreased the yield fractionally. But the Fed is still on course for that. Doesn't appear to be a change because, from their standpoint, the economy is doing great and there are no issues. So if they believe that, then they're going to continue. And the market seems to think that there's some other dynamic at play. From a Bitcoin standpoint, still barely holding between that same bottom support in the 18 to that 22 that kind of marked the line right there. No real change, and it's really kind of kept pace with where the market's been going. From an ES50K standpoint, you can see that was just a nice clean short, and then it bought the turnaround for the long side. And you can still see we had white leading for a little while, but then the magenta making a spike back up, and not having dipped below yellow is always the element you're looking for continuation. So I think that this long setup could have a little bit more room for it. Um, the action from last week saw some nice buying, but positive extremes right down here began the initial rally. We'd already had a previously marked outlet at 957 that left the 70 range. It was close enough, no reason to move from there. And we bounced around it a little bit. Selling began pre-market, but then right as the market was about to open, the buys. And that lifted things quite nicely for a while. But as you can see, when you create these positive extremes to begin it, it's just a matter of time. And in this case, you're waiting for that shakeout to start to fade. And then as soon as the sells come in, you'd be like, oh my gosh, why isn't the market dying at this particular point? Because you had decent sells, DOC spreads, all of it was together. But the secondary wave coming up, too much. And it's always a good indication when you get this kind of power move from MBI readings and you don't see much action in that. when that sell comes in, usually you get a little bit more oomph to it. And you can see that oomph was significant. There was just selling and it filled back all those positive extremes, the ones from the earlier part of the open, and kept going. And it's that follow through that algos don't always anticipate. And when they get some of that carry through, it does encourage some buying because you're past what their expectation was for a median range or uh, sigma event sort of effect that they're looking at when they're trying to determine how much profit range to go for and whether or not to buy back in. You can see as we continued bottoming out, we got really close to what our expectation was, right around that 39, and then cut some buying. And that was decent enough to move things back up, and we're building on that, as you can see here in the post market. Well, now pre-market, before the open. That was the holiday session from here. It was pretty much flat. So there wasn't anything significant going on there. It was beautiful, though, that when they get the little positive extreme there, fill it all back in a single bar, then boom, bring it all the way back up to it. So this is early action. All good. As always, though, it's going to be exciting. I think that September is filled with a lot of fireworks. There's going to be lots of politics going on, and that could move some markets. So we're going to really have to pay attention to it. As always, though, you can look for me on the Skype chat. We can discuss it. Trade well. We'll talk again later.